Guys, welcome to my YouTube channel. In this video, I want to take you through how you can actually do futures trading. All right. Before I continue, please support us by subscribing to this channel. All right, to help us grow, and also like this video to help others to also see it. People that are interested in it. All right. That being said, let me just jump in. If you can see my screen, this is my Bybit homepage. All right. So once you are here, what do you have to do? Now look down here, you will see home, you will see market, you will see trade, you will see earn, you will see assets. Right, what you're actually looking for exactly is actually trade, because you want to trade, right? So click on it. Once you've clicked on it, this interface is going to open. This is where you are doing all your trading, right? But before I get into how you can place your trade and rest of them, let me also take you through the way the interface works. Right now, if you look at your left hand side, you see charts. You look at your right hand side, you see trade. Right, let me first break those two environments down for you. Now first of all, look up, you see sports trading, you see sports. As I'm clicking now, also look down, you see, look to the next feature there, you see features. Right, you see features, you see sport as well. Right, so now once you want to trade sport, you come here and click on sport. Right, and once you want to trade features, you come here and click on features. Right, but for now I want to work on features. Once you look at your top left hand side, you see XRP USDT. Right, now that is a currency pair. Right, that is called what? Currency pair. If you want to actually trade, if you want to trade a coin that probably is not here, what do you have to do? You click on it, that currency pair that you are seeing, click on it. Once you click on it, it will open this interface. Then if you can't find it here, you can actually search for it. Let's say you want to trade tone, so look at it here. Once search for it, just click on it, and there it has changed for XRP to tone USDT. Right, so once you've done that, then you can go ahead. Like I said, I want to actually take you through the two environment, which is the chart and the trade, for you to really understand it before we can get into placing trade and rest of them. All right, so now once you click on chart, now look down, you see time. Now you can see 15 minutes, 1 hour, 4 hours, 1 day, and more. These are the time frame for your trading. Right, how does this work? Now let's assume that you are under 15-minute time frame. What 15-minute time frame simply means is that all the candlesticks that you are seeing here were formed under 15 minutes. Right, now if you go to 1 hour time frame, it simply tells you that all the candlesticks here were formed under 1 hour. You go to 4 hours, it simply tells you that all the candlesticks here were formed under 1 hour, no matter how small and no matter how big it is. Right, so I want to believe that's taken, and you want to see more, just come and click more. Once you click more, you see other ones. You can see 1 second, you can see 1 minute, you can see 3 minutes, you can see 5 minutes, you can see 30 minutes, you can even see 1 week, you can even see 1 month. Right, so it depends on whichever one is okay for you to use and trade. Right, for me, I like using 15-minute time frame. I like using 1 hour and 4 hours, right, to actually do my analysis and place my trade. So apart from that, now after more here, you see where they call depth. You see where they call depth. You click on it. Now once you click on it and open it, you see the green aspect of it, the green side, and you see the red hand side as well. Now the green side simply tells you the amount of buyers in the market. That's people that are long in the market. Right, and the red hand side shows you the amount of sellers in the market. That's people that are shorting the market, right? Now here they call it the demand and supply side of the chart, right? Now once you have a lot of people actually buying, right, you now see the price actually shoot up. And once you see a lot of people selling, you now see the price does what? Goes down, right? So I just wanted to know that as we progress. The next I want to look at is the candlestick, right? Before you place any trade, it's always good that you do your analysis. I'm not going to use this video to actually do that, but I think I'm going to do another video on technical analysis, so that I can also put you through one or two things I need to know about technical analysis before you can actually place your trade. Because you need to understand the trends of the market. You need to know the support and resistance before you can actually know, okay, at this point I need to place a buy, at this point I need to place a sell, or at this point I need to long the market, at this point I need to short the market, right? But before then, you have to check this trend in the market, right? If it's something that you think, okay, the market is trending upward, you need to do what? You need to place a long trade, right? You need to place a long position. The market is trending downward, then you need to place what? A short position in the market, right? So apart from that, once you leave the candlesticks that you're saying, you come down here, you see indicators, hammer, ball, marks, Marvel, Mark, and the rest of them, right? All these are indicators that people use to trade, for people that understand better, right? So all these are indicators that people use to trade. I don't really use them because it doesn't really work for me, right? So I don't know if it's going to work for you. You can also check how it works, right? But if you want to check, let's say you want to use hammer indicator, you can just click on it. It comes up, right? Then let's say you want to use ball, right? You can see those indicators like that, and you can just check on how it works, then you can use them. So those are the indicators that you can actually use for trading. Okay, then once you go down here, you will see order book. Order book simply tells you people that are buying and people that are selling at the same time, right? The depth that we saw before, which is the supply and the demand part of, which is supply and the demand in the market, is actually the graphical representation of this order book, right? So this order book tells you, okay, this amount of people are actually doing what? They're actually selling, and this amount of people are actually buying, right? The red one means that these are people that are selling, and the green actually tells you the people that are buying, right? So I want to be that's clear. Okay, so let's get into trade, because this is where we need to do all the magic and rest of them, right? Now once you jump into trade, the first thing you need to look out for is actually the currency pair. I've actually showed you this one before now. Okay, now let's take, for instance, we want to trade Ethereum, right? Ethereum USDT. I want to trade Ethereum. Now what do? We just go to this currency pair and select Ethereum, like I've just done. After you've done that, then please take note of this. Take note of your margin, right? So if you look at my left hand side, right? If you look at my left hand side, you see isolated. Now there's a previous video that I actually did that I took time to explain the concept of futures trading. Please, I'm going to put the link to the video on this particular video. You really need to go back and check that video. That video is very important. I took time to actually break down the concept behind futures trading and spot trading as well. All right. So once you click on that, isolated, now you see isolated and cross as well, right? So please, I want to advise you always, even as a beginner, As a beginner, always use isolated. Now, what isolated simply means, now let's assume that I have $500 in my account and I'm placing a trade of $100, right? If I'm using isolated, it simply means if I finish using the money, or I place a trade and a trade goes against me and I lose my money, it will not be more than that $100 that I used to place that trade. Please take note of this. But if you are using cross simply, after the money that we have used to place that trade has finished, cross will automatically cross into the balance that you have in your wallet, which is the $400, right? So it is important that you understand the difference between isolated and cross, so that once you are trading, you know exactly what they are using, right? So now, like I said, I want to advise you that you should always go with what? Isolated, right? The next thing you want to actually take a look at is actually leverage. Now, if you see after crossing, you see 10x there. That is your leverage. Leverage simply means you borrowing more money from the exchange than what you have for you to use and trade in the market. Please take note. And why people always do that, this is because of the fact that they want to maximize the profit in the market. Please take note. People want to maximize profit. People want to maximize profit once they are trading in the market. That's why they always use leverage. Now, how does leverage works? Let's assume that you are trading with $10, right? And you are using 10x. It simply means that you multiply that $10 to that 10x, right? Which simply means that you are going to be trading with $100 instead of $10, right? Once you have multiplied that $10 by 10, it automatically gives you $100. So if you are making a profit, right? If you are making a profit of, let me say, 10%, right? It's being calculated based on that $100, not based on $10. I know the higher the amount, the higher the money that you make. At the same time, please take note of this. If the market goes against you and you are making losses, that means, let's say you are making a loss, you are making loss of, let me say, 10%, right? Now the market is going to also be calculated based on that $100 for you. So whenever you are using leverage to trade, please always be very, very careful to make sure that you use the right leverage, right? Because people sometimes want to make more gain and they went to use an instant leverage and discover that the market will just go against them and they will lose all their money, right? So now let's see how we can place a trade, right? Let me use market order. Now, market order also explained in the video. You need to go back and go and check that video very, very well. You need to go back and go and watch that video. Market order simply means I'm placing this trade and I want it to be executed now in the current market price, right? Oh, there's something I need to do. I need to transfer money to this wallet, right? So let me quickly do that. Before you can actually start trading, you have to make sure they have money in your wallet. If you look at my own wallet, I don't have any money here. So let me move money from my funding wallet to my unified trading wallet right away. So let's do that so that I can also see how this is done, right? So you just go to my assets, and once you click on your asset, you see that you have two wallets under your assets, right? You have funding wallet, you have unified trading wallet. Now every fund that is being sent to you, right, even if you are doing P2P, someone sends funds to you, it comes to what? Funding wallet. Then you can now move it to unified trading wallet if you want to use it to trade, right? So you just come here to transfer, click on it. Once you click on transfer, right, now if you look up here, you see from funding account to unified trading account. That means I want to move the money from funding account to my unified trading account, right? So but if you want to move from unified trading account to your funding account, you can just come and click this button in the middle, click on it, let it load. Once you click on it, as loaded, you see that it has changed from unified trading account to funding wallet account, right? So I don't want to move from unified trading wallet to funding wallet because I don't have money there. What I want to do is for me to move from funding wallet to unified trading wallet. So you just come and click here, let it change back. So once I've done that, you come and click on marks, right? Click on marks. Then after clicking on marks, then you come and click on confirm, right? Click on confirm. So you can see it has been transferred successfully. So just go back to my trade. Let's see if we can actually have that. Let me refresh. You can see the money has entered my unified trading wallet, and you can see it on my account, that and you can see it here, and I can use it to trade, right? So let us continue. I said I'm going to be using market order, right? And I said market order simply means you want to execute the trade right now. All right, so now the next thing you want to do is order value. Order value. Now remember that my leverage is actually 10x, right? And I want to use $5 to trade. If I want to use $5 to trade, I want to multiply that $5 times the 10x. That is 5 times 10, which will give me $50. So I come here and I put $50. Right? So now, after putting $50 here, if you look down, you see the quantity, and the next thing you want to check is what? The cost. Now see cost here, I'm actually paying 5 USDT, but under here I put 50 USDT because of the fact that I'm using leverage, right? So after doing that, then for some of you that want to put stop loss, you can actually do that. But for me, I like placing the trade first before now come and put stop loss and take profit. So what do I have to do again? I just click on, let me use shorts, right? I'm assuming that the market is going to come down from where it is now. So I want to use shorts. You just click on shorts. I'm shorting the market. So you just click on confirm. And here we go. We are in the market, right? So once you've done that, you come down here, you can see everything as it is happening right in front of you, right? Now, if you look at my phone screen, you can see that we are currently losing, right? We are losing by 0.63 0. Oh, is the market just moving up and down? We are losing at $0.37. We are gaining now, right? We are earning now currently, right? So now once you've done this, the next thing they want to do is for you to set what? Your stop loss and your take profit, right? Please don't make that mistake of placing a trade and you don't put your stop loss and take profit. Risk management in trading is very, very important, right? In fact, whenever you are trading, please always divide your money into 10 places. Let's assume that you have $100 in your account. Don't trade more than $10 in one trade, please. It's not about getting rich quick, but risk management in trading is very, very important, right? So if you are putting it small, let's say you are going with, let me say you just have $100 and you are going with $10, there's no how you will lose all the money like that. And at the same time, remember that you are also using stop loss and take profit as well. So also make sure that you protect your account, apart from making sure that you split the account into 10 for the purpose of risk management, right? So now what do? We want to set our stop loss and our take profit, right? You can see that currently we are losing by 0.11 cents, right? So how do you go about setting your take profit and your stop loss? Now if you look down, you will see where they say set TP/SL. TP simply means stop take profit and SL simply means stop loss, right? And what do they actually do? You are actually trading the market. Once I make this profit to this point, please close the trade for me, right? Because the market is so volatile that you can be in profit, but all of a sudden the market turn against you and it comes down and you are losing. right? So assume that you set your take profits, the market should have, ended the trade and you are in profit. Then once it comes down, you can also enter the trade again, right? And also make money. So that is the purpose of having to make sure that you put your stop loss and your take profit, just to protect your account, right? And also protect your earnings, right? So how do we put our take profit and our stop loss? So you come here, you click on where they say set TP and SL, right? You just click on it. Once you click on it, right, this page will open like this. And if you look up here, you see where they say take profit triggers by ROI percentage, right? So you now say, okay, where do I want this trade to actually stop, right? I want it to stop when I have made a profit of 50%, or let me say 100%, right? Then I want to get out of the market, that stop loss, once I make a loss of 50%, right? So now I'm using $5 to trade currently, and I'm telling the market, once I am able to make extra $5, please take me out of the market. I don't want to continue again because I don't know what's going to happen next. The market might reverse and go against me, and I'll start losing the profit that I've made, right? So under your stop loss, you're telling the market, please, if I'm able to lose 50% of my capital, what I'm using to trade, please take me out of the market. I don't want to lose all the money that I'm using to trade this particular trade, right? Remember that you're using isolated margin. You're telling the market, I don't want to lose more than 50% of what I'm using to place this trade, right? So what do you do next? You just go and click on confirm. Once you click on it, your stop loss and your take profit is being set in the market, just to protect what? Your money, right? So once you've done that, you can see how everything is playing out here. You can see that we are currently losing, right? All right. So sometimes you might want to close. Let's say you are already making a lot of profits in your trade, and you want to close some percentage of the trade, right? Okay. So how do you go about closing some percentage of your trade while you still allow the trade to run in the market? So how do you do that? You come to close by here, right? You just click on it, and you are like telling the market, okay, I want to close this trade at 10%. I want to close 10% part of this trade, right? Or I want to close 25% part of this trade. I want to close 50%, you can click on it. If you want to close 75%, you can click on 75%, right? And if you want to click 100%, 100% simply means they are closing the entire trade. You don't want to be in the market anymore, right? Now I want to close the trade, right? You just come to 100% and click on 100% and click on confirm. Then once you've done that, the market closes, right? And you can see under position here, we don't have anything again. Once you place a trade, it will be under position, right? If you're working with limit order, it always comes to order here. The trade that we just executed, we use market order, right? So now let's check how we can use limit order, all right? And we have what? We have two limit order. That is the buy limit order and the sell limit order, right? And how do you go about them? So now once you come to here, you click on under market, you come to limit order, right? Now let's see how we can actually place a buy limit order, right? Now a buy limit order simply says, okay, let's take for instance the price of Ethereum now is at $10, right? So and you're like, I'm based on my analysis, the price is going to come down to $7. Once it comes down to $7, it will from there it will go up again, right? Now you can now come to $7 and place a buy order there. Once you place a buy order on $7, right? Once it hits $7 and it goes up again, you are already in profit. That is how to set your buy order. Now, if it hits $7 and it still goes down, the market will trigger, but you are going to be losing, right? So, if based on your prediction, it was correct that once it hits $7, it will still go up back based on your analysis, then from there you are going to be making profit, right? So let's see how we can actually set a buy order. The price of Ethereum is currently selling at $2,497, right? So now we are setting a buy limit order, right? So we are assuming that once the price of the Ethereum comes down to, let's say, 2,000, right, it will still go up again. So let me say 2,500, right? So we now put here 2,000. So you say once this trade will be triggered at 2,000, once the price come down to 2,000, right? And how much Ethereum, how much USDT do you want to use? We are still using, okay, let's bring down this leverage. Let's go with 5, or let me, so now we are still using that 10x leverage. So now I'll now put 50 here, right? And I'll put 50 here, and we are saying once the price goes down to $2,000, it should do what? It should trigger the market, because you are assuming that from there probably you have seen a very strong support at $2,000, right? And you think, okay, once it hit that point, it will still go up, right? The price in the market is going to retrace and go back up, right? That is your prediction based on your analysis, right? So you now come here and click on buy order. So now you are in the market, right? But if you look down here, you will not see it under position. Do you know why it's not under position? Because you are not in the market already, right? You are waiting for the market to hit your limit order. Once you hit your limit order, the market triggers, then it comes to position, right? Now if you look at order here, you can see it here, right? You can see your order under order here, right? Now let's assume that you are like, okay, I don't want to continue here, I want to shut it down. How do you go about it? So you just come to this icon at your left hand side, right, and click on it. Once you click on it, you see open order here. You just click on open order and click on cancel, and that order is being cancelled and you're out from the market, right? I want to believe that's very clear, right? All right, now the next thing you want to do is to set sell order, right? Now the price of Ethereum is actually 2,500, right? Now you are saying, okay, I'm thinking that it will get to 2,600. Once you get to 2,600, it will drop again, based on the fact that probably you have seen a very strong resistance, right? You have seen a very strong resistance. You are like, okay, once you hit that resistance, it will do what? It will come down again. So you now put, okay, I want, once you get there, once you get to 2,600, right, I want to sell, because I'm thinking that it will come down once you hit that resistance, right? So now and now say, okay, how much am I using for this trade? We are still using 10x, right? So we are using how much? We are using $50, right? So you now come here and click on sell. Okay, so at the same time, let us enter our, I didn't do this in the first one, let's do our stop loss and I take profit, because the market might go against us along the line. We don't know, right? So now I'm saying that, okay, if the market goes down, okay, if the market still goes up, let's say it hits that 2,600 and still goes to 2,700, or let's say 2,800, that the market should stop. Oh, sorry, that is take profit. Take profit should be 2,000, let me say 2,400, right? So my stop loss, I'm simply doing what? I'm simply selling, right? So from 2,600, if it hit there and come back down and get to 2,400, I should be in profit, right? So at this point, I want the market to actually short me out, right? So at the same time, I'm also telling the market that if it hits 2,600 and still go up to 2,700, right, that the market should actually do what? Take me out. That I don't want to lose more than that. So just click on short, right? Click on confirm. So I am in the market, right? So that is how to place a buy order and a sell order. It's very, very simple, right? So now you go to order, discover that you have one order there, and if you want to shut it down, how do you go about it? You just come to this point and click on it. Just click on this icon here. Once you click on it, you come to open order, and click on cancel, and you are out, right? So that's how to go about placing futures trading, right? And before you do that, you have to make sure that you understand technical analysis, because that's very, very important, right? And at the same time, please always be very, very careful with managing your capital. It's always important that you keep your capital safe. At the same time, also make sure that you start with demo trading first. Right? I've done a video where I take you through on how to open your demo account. I'll also drop the link on the description of this video. You can go and check it. That one, Bybit will give you enough virtual funds. It's not something that you can withdraw. Enough virtual funds so that you can use it to practicalize how to trade, right? I said I'm going to do a video on technical analysis where you can also learn some things you need to understand about the market to be able to place trades, right? So I'll do a video on that. You can also go through it and also learn one or two things about technical analysis. All right, that being said, thanks for watching, and please, like I always say, support the channel by liking and subscribing, right? So that we'll be encouraged to do more by bringing more important videos like this. And thanks in advance for doing that, and enjoy the rest of your day. See you on our next video. Bye bye.